Hey, this is LaSean at CAGR Investments, and you are listening to the S.M.E Stories podcast.
You are now listening to the next great small business podcast. Welcome to the S.M.E Stories podcast, where it is all about small businesses in Canada. And here's your host, Ken Alfred.
Hey everybody, thanks for downloading the show. We got a great episode today with LaSean Smith from CAGR Investments. All right, a little bit about LaSean and CAGR Investments. They are a private equity firm. They have permanent capital, and they focus on building and buying companies powered by audience and automation. They like to use the words free cash flow is sexy and sharing what they've done along the journey. And he really loves solopreneurs. And CAGR Investments, in terms of the amount of equity that they do provide for basic other businesses, is between that $5 million and $50 million range. So I think we're going to have a really interesting conversation today. So sit back and absorb. All right, guys, we have LaSean Smith from CAGR Investments. LaSean, how you doing?
I'm fantastic. How you doing, Ken?
Doing well. The weather's getting nice here in Ajax, Ontario, Canada. We're starting to get 2-digit weather, which is really good in degrees Celsius. And just like I mentioned in my last episode, I actually have a sheet here of the conversions from Fahrenheit to Celsius.
I might need the cheat code.
Because a lot of my guests, when they tell me, oh, yeah, it's 85, 72 out there, I'm like,
yeah.
I don't know how to put that in context.
In school that we've all done the math, and I just still haven't remembered how to do that all in my head.
Yeah, I know. Same with converting pounds and kilograms. And it's like, just, whatever. But thanks for coming on. So,
yeah.
All right. CAGR Investments. What's your story?
Well, I love talking about the kind of the power of what I now call the very small business. It's interesting, we talk about entrepreneurship, whether it's a side hustle all the way to someone, as the CEO of a multinational corporation. Like the number of humans, I do think introduces different systems that you need to go run your business. And over the years, I've just become fascinated by how much output can you get out of a small team while still making that team happy. People loving the work that they do. Like, yeah, sure, you can try to juice every last bit of productivity, but that's not necessarily the best way. And so I have this concept of the VSB, the very small business, where that is 0 to 20 employees. And I'm just obsessed on what does it take to run those well? What type of capital do they need to succeed? What type of frameworks and systems do those leaders need to implement? And, how can I support that community? It's both a point of passion and where I see really an untapped business opportunity. And so at the core of what my business is finding, CEOs, operators to go run my very small businesses. And so what I have is a collection of these VSBs, and then I place a CEO or COO in each of those, and they run them. And so I don't show up on the day-to-day. I may, have a quarterly or a bi-quarterly strategy call. We do weekly one-on-ones, and that's more coaching, where I'll spend 30 to 60 minutes with that person. And what I found was, from my time working at big companies, I spent over a decade in big tech working. These are massive companies. One of those companies had over 1 million employees. It's a massive, massive engine. All the way down to now, where I have a team of contractors and then a number of companies that I own. The systems that you can use at a big company versus what you're working as a business to one, many times are very similar. You just have to have the discipline. And so I'm just very passionate about how do we help VSB owners become more successful.
Excellent. And if you could just run down your resume really quickly. I know I might touch it up in the intro, but just for the listeners so they can hear. When you say big tech, how big have you been working there, LaSean?
Yeah, so I started, just to give you the disciplines, because I think that's almost more valuable. I started as a software engineer. I moved to UX design, and then I went to business school after that. Most of my jobs immediately after that were product strategy or product management. And then, that's kind of the trifecta of traditional software development, design, software or dev, and PM, as they call it, product management. And so that led me to more GM roles, where I was managing teams that had combinations of those folks. And over time, added some other disciplines, applied scientists, data scientists, other folks, as more of that work became more AI and machine learning centric. But I spent over 12 years combined between Amazon and Microsoft. And what I really love about those experiences is, especially at Microsoft, I got a chance to work on very different parts of the business, from the at the time, they had kind of a consumer platform business that evolved to things like Xbox and some of the other consumer first platforms. Got to work on the cloud, the early days of what is now called Azure. Got to work in mixed reality on a product called HoloLens that was looking at, kind of the AR, the augmented reality experience. And then enterprise SaaS, the Dynamics business, including the no-code business. And so across all of these various stops, it's like, all right, you start to figure out, how do I build faster? How do I assemble teams? How do I kind of make sure I'm listening to the customer correctly? And, back to the point, what works at Amazon, like Amazon's over 1 million people. Like this is, and I would say, even though sometimes Amazon gets a bad rap for kind of how hard they work you, like you're going to work, right? But it's almost like exercise. And, I almost look at it like a fellowship or a second grad school. When you leave that type of experience, you're very fine-tuned. And I would argue, of all the places I've worked, large and small, the operational muscle at Amazon is just world-class. And that was a great piece of experience for me to kind of gain. And again, I am always like, all right, what bad habits do I need to unlearn from these big companies? Like too many meetings, sometimes there's bureaucratic decision making. Like, don't bring that to the very small business. But what things are working? And so the operational muscle, having the right rhythm of business, having a strong metrics driven weekly business review where you're forcing everybody to say, what do we learn from the customer? What are we doing as a result? Just having everything very action oriented to pick up the execution speed. That's the unlock that you see at scale at some of these large companies, and pulling more of that into small business and having more of that discipline, I think, is a huge benefit.
Yeah. So Microsoft and Amazon, a couple of small time businesses, right? A couple of startups.
Yeah. Hey, they both started small. Jeff in a basement.
Everyone starts small.
Albuquerque or New Mexico for Microsoft. So yeah, even the big successes usually start with a small germ of an idea. And that's part of what I think is amazing about entrepreneurship. You have, I kind of look at it as 3 forks in the road. You can be maybe 4, I guess, but you can be a business of one, and you can say, that's all I'm ever going to do. You can be a small business that never needs to get large. And you can have, just a great cash flow position from that. You can be a startup that's going to be venture backed, and you're kind of growing, momentum. And then the fourth I was going to add is kind of, there's a hybrid where, you can, become bootstrapped, create enough leverage in the market, and then go pour gasoline on it later on. And so the fact that all of those are options for people who are starting, I think, is fantastic. It's also why, I try to coach folks. I do kind of a non-traditional business. I call it free coaching. So I don't have a paid coaching business, but I love to coach people for free because it's like the perfect user research pipeline. I get to ask people questions, maybe give them some tips, but they're going to tell me what their pain points are. Those are products to build. Those are places to go explore. But when I talk to folks about that, many times they feel like they have to pick a big corporate job, or they have to pick, venture-backed startup. And some of these things can be a timing and a sequencing thing where it's, appropriate at a certain season of life.
Yeah, no, exactly. So, no, it's pretty cool about your background, which is why I was so interested in having you on the show in here. And looking at, so you said you offer some, so walk us through your services that you provide, like the consumer right now. So just so people understand as well, because some people might say, oh, what does he do exactly? So if there's free coaching, that's great. What do you mean he has a bunch of CEOs assigned to businesses? So if you can just unpack your business in terms of saying, wow, so I guess the listeners know what you're talking about, because I'm sure I'm on your website, so I have a general idea what you do, but I really like to hear you break it down just a little bit more.
Yeah, so private equity typically deals with much larger deal sizes. All of my deals are under $10 million. And so for the traditional PE players, that's laughable. They're like, oh, ha ha ha, right? That's just so small that
10 million.
That number doesn't matter. The other thing that is more traditional is private equity. And it's helpful to kind of talk about alternative asset classes. So alternative assets are typically real estate, private equity, and hedge funds. And private equity has traditional private equity and a subset called venture capital. And in all of these, what you typically have is a set of general partners that are raising cash from limited partners, LPs, into a targeted set of asset classes. And different countries have different laws on how you're allowed to go collect that money. There's a common tool called a PPM, a private placement memorandum, and that's like the PowerPoint or the thing that says, "Hey, if you give us money, we're going to invest it in these types of assets. And if you follow those rules, you don't lead those LPs astray. What you get typically is something called a 2 and 20. It means you get 2% of however much cash you raise to run the business, the investment business. And then when you actually sell one of those businesses or you have a liquidation event, the company goes public, it gets acquired, you get 20% of that, and it's called the carry. And so these are, that's how most businesses work, from, many real estate deals, many, again, private equity deals. And private equity has something called LBOs, leverage buyouts. And so this is where you go raise more debt to go fund a company. So a company costs $10 million. Maybe the investors only have $1 million or $500,000. And what they'll do is they'll go raise some money from limited partners for maybe the other $500,000, and then they'll raise debt. And they secure it against the income that company already has for the other $9 million. And so they don't actually need the $10 million. But when you run your business that way, you're in service of those limited partners. You have to be a great steward of their cash. And those people typically want their money back. And so what they will want to do is they'll say, all right, how long do you plan on holding this company after you buy it? Is it 3 years, 5 years, 7 years? And private equity sometimes gets a bad rap because sometimes it'll take the company and break it into pieces, and they don't always do it in the most humane way. And by breaking it into pieces, it might be there's 3 products inside this company, and we're going to kind of spin these off to different places. And so there's all this work that happens to kind of make all these actors in the system work. My business, back to your question, is very simple. I do what's called permanent capital. So I don't have any limited partners. I use my own cash to buy a business, and I buy very simple businesses. I don't do anything complicated. So an example, I have a web agency that builds SaaS products. And so they build software as a service products for other companies. And the leader of that business, she has a small team of, I think it's about 9 to 10 people right now. So it is a very small business. And her job is to both go get new customers and to, she's on the hook for delivery to go deliver that business. And what I spend my time doing is finding businesses like that and finding people like her to go run them. And so at the core of what my day job is to go find deal flow and to be a recruiter for CEOs.
Wow. Sounds like a very interesting role, actually, because I think for most people, like I said, we're going to have your website on the show notes there so people can really look at it. You have a very perfect, table, which kind of outlines, because some of the terms that people hear is hedge fund, venture capital, angel investor. And sometimes we're like, well, what the hell is all that stuff? And you literally did a great job breaking it down as to what levels that we're talking about, whether it's 250,000 to 5 million or up to 50 million, and where those terms kind of generally play. But I like how you kind of highlighted your specific sweet spot, which is like this private company, and it's called micro private equity, right?
Yeah, because the deal sizes are so small relative to, most deals that you'll see in the news and the media. They're, regardless of currency, the equivalents of hundreds of millions of dollars or billions of dollars. Like, these are massive deals. And so these small micro private equity deals are not really even on people's radar. And, back to the earlier point that we touched on, I believe it's very important to kind of figure out what your main goals are. Like, how are you going to measure success in your business? And for me, I just have 2 metrics. Am I happy? Am I generating free cash flow? I'm not worried about the other metrics. And the reason I use free cash flow, that's a finance term. That's the cash you have after you pay everything. And there's all sorts of ways to get funny with the money and the accounting. You'll hear, the term
creative accounting. Yeah.
Yeah. Creative accounting, financial engineering, all these things to make companies look better than they actually are. I'm just interested, am I happy if I'm buying a company? This is a quick sidebar. One of the reasons, this is probably right now one of the number one reasons I don't buy a company is too many of the employees are unhappy. And again, this is why I get so excited about this topic, because a lot of the leadership principles that a CEO can use to get a small team, kind of galvanized around a mission are really straightforward. Like, you don't have to work very hard to be a good manager, right? The list of tasks are and techniques are not very long. And so if when I go talk to folks, if I talk to more than a couple of employees, I'm like, these people really aren't happy in this job. I know it's going to be a heavy lift on the culture side to kind of, the old CEO is going to leave. This is usually someone who's aging out of the workplace or they're ready to move to another season of life. You're going to bring in a new operator. That person's going to have to stabilize the team. And these people are already generally professionally unhappy. And it's just a combination of bad things. Like, looking at the spreadsheet, the bank financials, like, all that is trivial. But, are the humans that you brought together, actually enjoying themselves? I just find that like a huge intangible on whether or not a company is going to continue to succeed. And so, yeah, that's how I look at it. Like, am I happy? Does this business generate free cash flow? And then everything else is kind of in the details.
Yeah, no, that's great to hear. So, what are your current plans right now? So, where do you see yourself in the next 5 years, like in terms of growth and expansion? Where do you see your company?
So, when I coach folks informally, or when I'm working with my operators, I love to be super transparent on the goals. I have peers who say, LaSean, you're not being ambitious enough. But I like really clear goals. And so my current goal is we are trying to stabilize 6 portfolio companies that are each generating $500,000 in free cash flow. And so that's $3 million of free cash flow a year. I don't have a sophisticated financial strategy. I take that cash and either reinvest it to acquiring additional businesses. I have some managed real estate that is very hands off for me. And then I buy index funds in the market. Like, I don't do anything esoteric or super complicated. And that's just the business. And every time I've tried to do the math to grow faster than that or get the numbers larger than that, I get back to the point where, okay, I'm going to need limited partners. I'm going to need outside investors, or I am going to have a calendar that I don't enjoy. And, when I worked in big tech, I'm fortunate to have had amazing managers. I've worked on some incredible products, and I still didn't love those jobs. And primarily, there's just a lot of overhead on meetings I didn't want to go to, administrative processes I didn't want to follow. There's just work I didn't want to do. And so I've designed my life to say, all right, here's, call it enough. It's still, it's still more than I am going to spend, but here's how much money I'm structuring my business to generate while not sacrificing this key edict of, stay happy.
Well, yeah, I think that's what most people really think about, right? Because I'm with you in that if I was to ever, like, I don't have enough to buy a company, but to the fact that, do I want to buy a company where everyone's unhappy? Because if they're unhappy now, what makes you think they're going to be happier when you're there, right? It's like
Yeah, no, go ahead.
Yeah, it's almost like a toxic environment. It's like nothing can almost help that. It's almost you have to start scratch, like, okay, let them all go. And then try to bring in new people. But then there's that time and expense to try to get the right people to come in. So how many companies do you currently have right now that you own?
So have 4 companies that I own, and we have a term sheet on one, and we have 2 that I will likely invest in to start. And so sometimes I'm looking at a business, for instance, right now, there's a business I looked at that it's a software business that does what's called social proof, and it's in the video testimonials business. So let's say you have a plumbing business, a HVAC business, a coaching business. It doesn't really matter what it is, and you want to help your prospective customers understand that, hey, other past customers really love this product. And so there's a class of software where you send out a link to past customers, and they record a video review or testimonial, and then you put that on your website. It's a very, very simple product. It's like I said, this is not complicated. And so I was looking at a business that I was going to acquire in that space, and the multiple that they were looking for, and the kind of quality of the code they had written, like a number of things, it just didn't make sense, right? And we never got into like the security reviews or the full code reviews. But typically on these deals, you will sometimes have to sign an NDA on to look at the financials and other types of things. But even on a cursory look, when you're first meeting folks, I care more about who are the humans and the rest of the team? How long are people been there? There's something called it's a very gendered term. It's called the key man clause. And many times when you acquire a company, you want to say, this deal is contingent with these employees sticking around for this amount of time. And sometimes you'll give them a bonus, or you give them something to kind of get them to stick around. But anyway, so I'm very interested in this space. And as I looked at the products for sale in this space, I felt were either overpriced or the products just weren't good. And so this is an example where I have enough conviction in that space where I'm hiring someone to go build and operate that business. But they're not trying to invent something new. We're just going to build what I hope will be the best in class product in that category. And so that's kind of the balance of build and buying. Either can be a decent tactic.
Yeah, and so you have like a software as a service company. You have like the social proof company, and the two ones that you own right now are.
There is a online learning platform. That one's relaunching in the summer. It's called Graduated, and then the fourth is a domain broker. And so this is a business that sells secondary domains. And so that's another very interesting business, because that business doesn't make a ton of money right now, but the margins are around 80%. I mean, so it's really crazy. So it's
wow.
It's a really interesting business. I'm headed down to Austin at the end of this month for NamesCon, which is sidebar. This is a hack for, I think, all business owners. If you don't have a ton of money that you want to spend on marketing and sales, if you go to great trade shows and conferences without paying for the booth, and you just go there in more of a business development capacity, the $2-3 grand that you spend, you can almost always find interesting partnerships, potential customers, like so many things you can do when you get off the video camera and just like go meet with humans in real life. But that business I really love. I've kind of toyed around with domain names for many years, and for many industries, the domain name doesn't matter anymore. There's 7-8 figure businesses that run off Instagram handle, right? So that's not like everybody needs a domain name, but it's still a very interesting space, and I just love these businesses where people already understand the product. My CEO is not trying to educate the market on why they need this. And all they need to do is to say, we're the best place to make this purchase. And so those are the types of businesses. And the theme that all of them have, or most of them have, is I'm a big believer in organic marketing. So whether it is, building a presence on social media, YouTube, newsletters, podcasts, I just believe these are some of the best ways to build trust, introduce yourself, and add value to an audience. And so over time, I call these relationship moats. If you build enough of these relationship moats, you will have something you can sell them. And I like the idea of building the relationships before you go peddling the offer, because then you don't have to do as much advertising. You don't have to do as much kind of cringe pushing of the product. There's just enough trust there. And so the companies in the portfolio are largely focused on the organic marketing space.
Well, yeah, I think it's great because you're talking about like you're not trying to land it too quickly. Because I think my last episode was with Hearts of Networking events, which a lot of networking functions where, especially for the inexperienced business owner, they're going in there to almost sell their company or sell their services or products to everyone on the networking event. When some people are just like, because you can yourself as an owner, you probably have felt everyone trying to sell you everything at the worst possible time.
Yeah.
Right.
So
you
many
can just be going there.
Folks will go, I will say, folks get really creative to like find different angles to like get your attention. I've had people write me letters, like physical printed letters. Like, how did you find my address? This is creepy. And like people like, but yes, like if you haven't built trust, why should I listen to your offer? And I use the word offer more, if you talk to salespeople, they will use that term, instead of like, why should I buy your product or why should I buy your service? Because I look at sales as a critical skill set that a job seeker, an entrepreneur, almost anybody should aspire to build. It's a muscle. And the definition I use for what is sales, it's helping someone make a high confidence decision where they get some payoff, or some positive outcome. And when you look at it that way, we're selling to potential employees, we're selling to coworkers, we're selling to our manager, we're selling to investors, we're selling to customers. Like there's so many different places where we're helping someone else make a decision. And that's really critical. And so if you haven't built that trust and you're at one of these networking events and it's just like, all right, so you want to buy my $5,000 coaching program? And I'm like, no. Yeah.
At least take me out to dinner first. I'm like, geez.
Yeah, a little bit. Now, I will say, while that's not my world, I'm very curious. And one of the benefits that I have as an investor is I have control over my schedule, because there's no employees, there's nobody looking for me, right? And so while I have a very structured calendar, I do something called calendar journaling, which is as I go through my day, anything that I cheat, where I had it on my calendar, but I procrastinated and I didn't do, I go back and I log what I actually did. I do it in 15-minute increments. And I've been doing this for years. And it's a great accountability hack to keep myself honest. But because I have flexibility in my schedule, getting back to that point, I can kind of look all over the place, read things, consume things, find my point of view, meet with people. And that's how I understand, what are spaces I want to invest in. Where can I go hunt for deal flow? Deal flow is just, potential businesses that are for sale. Who can I talk to that may be ready to leave a job that I could hire for a position? Like all of this work, kind of has a motion to it. And what I find is many times folks just aren't being intentional enough about kind of how they're spending that time. And I just think it's a huge kind of, again, not productivity hack, but it's like an intentionality hack. And so you can be a lot more intentional about how you spend your day.
Yeah, no, that's great. So you basically run a cash flow business for yourself. Like you don't have to worry about a lot of things. So when you take a look at, when you did a little crunching of the numbers before, like what did you find when you were purchasing these companies were like the biggest expenses that you had to do just for running your business right now? So I like to keep it simple. There's a great Peter Drucker quote. That's the kind of the godfather of management consulting. And a lot of what we talk about today is what does it take to be a good corporate manager? But he says that, the purpose of the business is the purpose of business is to create a customer. And as a result, the only thing that matters is making something or selling something, and everything else is just support. Right. And, it's not to diminish other roles that people may have, but the point there is really you need to make something and sell something. And so when I think about my expenses and my overhead and my cost structure, I try to keep it as simple as possible. And for my businesses, the coaching advice that I give to my CEOs is, as you get started, one product, one process. Don't tell me you're going to monetize all these different ways. Don't tell me you have like 12 different SKUs. Don't tell me it's like, well, when this customer happens, we do it this way. When this customer, no, one product, one process. And the overhead is largely cloud costs because we're very software centric, labor and the long road of organic marketing. One of the rules I have is zero advertising. No, none of my CEOs are allowed to. They have full autonomy over their budget. They are not allowed to spend even $1 on advertising. Interesting.
And it's not because it doesn't work. Just to be clear, I think that's worth calling out. But it introduces so much variability to your cash flow.
That's true.
Because you become the price taker. So Alphabet and Meta, whether you're advertising on Instagram or old school Facebook, YouTube, it doesn't matter the channel. You can't dial in, your customer acquisition cost, your CAC, with advertising and let it run for months and months and months. You're always recalibrating, right? And at certain points, if you have a high enough margin product, you can still, that's how, if you want to make some real money, you're going to need to introduce advertising. I'm optimizing not for market share, but for cash flow. And so I just don't allow any spend on advertising.
Well, yeah, I think that's what's a very interesting approach, actually, because if you think about it, most people are thinking, all right, I got to try to grow big and try to land as many sales as possible and advertise, get my name out there. Well, you're just literally, it's the old KISS analogy, keep it simple, right? Yeah. Is it going to make money on it? And let's try to keep it as normalized as possible, right? Like, yeah, there might be fluctuations here or there, but you want to keep those to a minimum, because at the end of the day, it's all about, am I putting more money in my pocket than what I'm spending, right? And that's a very interesting concept. But I don't think a lot of people look at it. I think they want to be like the be all end all, where you're just, like you said, I remember catching on you talking about this, you just need enough. You don't need an abundance of stuff, right? Which is unfortunately, a lot of people, they look for the abundance. They look for the most things they can buy, which is unfortunate.
Well, and I'm not here to judge if somebody wants a fancier car or a bigger house or more expensive vacations. Like, do you? But it's, at the end of the day, it's just math. And the way I look at it, the old 25X rule, where you take your annual expenses, you multiply it by 25, and in most markets, that is the number that you need to invest in passive assets to basically, have financial independence. And so if someone says, okay, I spend $8,000 a month, that's about $100,000 a year times 25, that's 2.5 million. And so if you invest 2.5 million in income generating stocks, bonds, and real estate, you never have to work another day for the rest of your life, no matter how long you live. And I just think people need to keep reminding themselves of that simple math, because once you reach that level of financial independence, you can do, I say there's 4 things you can do, and it's obvious a combination. You can just go chill on a beach. If that's what you want to do, go for it. You can give back, and you can, that can be charities, philanthropy, volunteerism. You can redistribute your time, spend more time with your family, with your friends, get your health in better order. Or you can start a new business, and you can start a business with infinite runway where you'll never run out of capital. You'll always be able to keep the business alive, because you can always bring the business down to just you, and you'll always generate enough money each month to cover that. And so that optionality, to me, is what's really magical. And so I really push people, like, even if you want to shoot for the stars, go get that first milestone where you've reached, financial independence, and the level of anxiety and stress and uncertainty, it'll just all wash away. And I would argue, for the folks that I've talked to in this space, including myself, once you get there, you realize some of the trappings are not the things you wanted to chase in the first place.
Yeah, no, exactly. So where can listeners reach out to you if they want to contact you?
I'm real simple. You can find me on Twitter at LaSean, that's LaSean. Or if anyone wants to talk about a business they want to sell, or if they're a CEO looking for a business to operate, you can stop by CAGR.com. That's CAGR.com.
All right. Well, thanks for being on the show, LaSean. It was great to have you.
It's great, man. Thanks, Ken. Have a great day.
Right. Hey, do you need an error-free website? Do you need transcription that's accurate and on time? Would you like to remove noise from your video or audio recording? Do you need a spokesperson for your business? If so, we can help. At Northway Capital Group, we are happy to announce that we are now providing website testing services, audio transcriptions, and audio cleanup, as well as spokesperson services. We would love to help you on your next project. Contact us for more information at northwaycapitalgroup@gmail.com.
Thank you for listening to the S.M.E Stories podcast, which is owned by Northway Capital Group. Please follow us on Instagram and Facebook at Northway Capital Group.